Quick disclaimer here, trading is very risky and carries a high level of risk. Anything said here is not a financial advice. Make sure you trade with money you can only afford to lose. Stay safe. Hi guys, it's a new beautiful weekend again. And as usual, we're going to be looking at what we did last week, where we stopped last week, and also a little bit of probably volatility indices. The ones we always check, volatility 75 index, and then volatility 75 1S index. On Euro CHF last week, we stopped somewhere here, probably here. 2, 3, 4, 5. I don't have my replay tool with me, so just bear with me. Last week we stopped somewhere here, yes. And what were we expecting? We were expecting sales from this supply zone because we had tons of liquidity here. And if this supply zone doesn't hold, we use the other extreme supply zone. And lo and behold, the extreme supply zone did hold, but after a lot of mitigations, first one, second one, and then the third one. So the third one was the one that eventually played out. But I doubt I would have entered this kind of trade. Probably I'll have taken the first sell or the second sell, but I doubt the third sell. Now, let's look into the first point of interest. What we're looking at was this liquidity grab, and then we're coming from a very big trend, which was the bigger time frame, which was the downtrend, right? You can see everything was very, very bearish. We got this mitigation here from the weekly point of interest, and then we said our targets normally was here, but still markets broke that low. You can see now beautifully markets broke that low, and now it's looking like a deep dive. Okay, now there's no longer any demand zone to the left to work with, and then I said we're going to be working with whatever we have on the other time frames, like the daily time frame, the 4-hour time frame, and then the 1-hour time frame also, meaning we are just going to be following the other flows in the smaller time frame. And then this POI was gotten from this 4-hour here, and then the other 1-hour POI was also gotten over there after we saw this break of structure and this other break of structure here. So we have to break of structures over there for this extreme zone, and then for this second point of interest. Now let's go into the smaller time frame to check here. I doubt there will be an entry here, and you can see markets pushed away from the point of interest, entering into the extreme zone. Now let's go to let's just use 15 minutes time frame for the sake of this video. Let's use the 5 minutes time frame, and okay, so this was the point of interest over here. This was the O mitigation. And then I was talking about some entries on previous video using 2 entries. Now that is 1 entry, right? So if you got an entry there, which is this current break of structure over here, you'd have gotten an entry here. You would have gone into what little profits, and ended up in what SA. So the profit was how many pips profits? Let's check. Just 10 pips profits, and then it was just about ranging. You understand? For me, I would enter this trade like this if I was using this entry model. Then if I got another break of structure here, if I got another break of structure here, I'm going to I would have locked profits. But unfortunately, I didn't mean I was inside this trade. I would have been in a loss, 2.5 pips SL, because there was no room to lock profits. But for the second entry, for those that always wait for the change of character first, then the break of structure here. As you can see, there was no break of structure to the downside to mitigate this other supply zone, continuing the sales. So if I was using this kind of entry model also, I wouldn't have gotten inside this trade. So I think it's safer to use this entry model than rushing into it, since it's coming from an aggressive, bullish momentum. Now, let's go back to the 1 hour time frame, and then it kept going up. So now remember this liquidity here, and then all those dots doesn't mean that market should what? Should sell. Entering the second point of interest. So let's check what happened here. Remember, markets was so aggressive. Let's use the same time frame, 5 minutes time frame. Yeah, so there was a break of structure here. We got this break of structure here. Clearly, if I was to use that kind of entry model, this would be the entry over there, and then this one sold very nicely. Stop loss above. And now you can see, so definitely if I was on this trade, I would have locked profits. Now you can see 39 pips, and sometimes my target for the day is always 30 pips. So somewhere here I would have been done for the day. So let's use the other type of entry model, okay, which is the change of character kind of entry. Over here, change of character below, and then where's the next break of structure? The next break of structure is here. Change break of structure also below. So where's the next point of interest? Gonna be here, okay. So definitely you would also be in what? Profits. You can see now, let's say 5 pips SL. Okay, this one wicked out of the stop loss, but stop loss should be above the previous high. And so same thing also. So this one is the safest entry because it's more like giving you extra confirmation to take this sell trade. So the trend is confirming that, okay, this is the first break of structure, this is the second break of structure, probably third and fourth, and so on. So a beautiful entry on that 1 hour point of interest. Okay, this was the zone. Let's minimize that. So now markets entered into the zone again, right? The second day, first day, second day. Now some people might ask, should I take a trade when market has done this, when market has done that? Actually, when market has mitigated it first, and then now market is mitigating it second time, and market is mitigating the third time. Now it has created what we know as liquidity, but still the liquidity grab was here. Okay, so this is the liquidity grab. Yeah. First of all, let me draw the liquidity zones. This one was the first POI, no liquidity. Then this second one was the second touch, second mitigation. Now it has created what? Liquidity over here. It has created liquidity over there. Now let's look at the liquidity graph. Okay, so can see like that. Let me draw this liquidity grab. Now you can see how this week grab the liquidity of those two previous highs, something like equal highs, grab the liquidity and then started coming down. And after liquidity grab, the movement should be what? Aggressive. So liquidity grab, though some people might expect more liquidity grabs, probably aggressive liquidity grab like this, but still, nonetheless, once it has reached the highs of those zones, then a good zone for liquidity grab. So for me, I would not want to enter on the second time now. You understand? I wouldn't want to enter the second time because now I've entered the first time, I've made profits, and then the zone should work only once. You understand? But now the zone has worked 2 times. Then, as a smart money trader or as a demand and supply trader, I know that this is a resistance area already, and I know these resistance zones create what? Liquidity. And like I said, after liquidity grab, then you can look for your entry. So then after the liquidity grab, you can then go to probably the 1 minute time frame or the 5 minutes time frame to enter the sales. And let's use the 5 minutes time frame. I doubt there'll be entry there. Let's check. So you can see it was very, very aggressive. I think there was even news because this movement is crazy. You can see this candle didn't really have wicks to the upside. So I guess there was news here. You can see now it is 115. And then most of these times there's always news, but let's ignore the fact that there was news. No M5 entry here, and then it's dropped. So for those that use M1, let's go to M1. That's the 1 minute time frame. Some people might get an entry and the likes. So after yes, definitely there was news. So during this time, I know that I should not be trading. Definitely, I wouldn't even disturb myself entering the 1 minute time frame and the likes. So entering the 1 minute time frame, we had a break of structure here. Yeah, that's a nice break of structure. And we had the supply zone here. This was the first supply zone. And where is the extreme supply zone? Probably this one, but that's been mitigated over here. So this is still the only supply zone that hasn't been mitigated. Now you can see after that is the break of structure, right? So this is the only supply zone that has not been mitigated. Looking at this supply zone here, this one has also been mitigated. This one has been mitigated here. This one has also been mitigated. So we're waiting for this one, and has given us what? Break of structure. Definitely my pending order is going to be on this one over here. Now my sell limits are going to be there, and stop loss above the eye like that. And then TP would be somewhere else, probably 1 to 3, 1 to 5. We are done, we are good. And then this one did 60 pips. Okay, so for those that like using the other kind of entry, this is it here. Change of character below. And where's the next break of structure? Over here. Yeah, so then this will be the entry also. So ended up drawing out the replay tool, and that would have been a good way to trade. But definitely, like I said, if it were me, I wouldn't take this trade again because of the news. Okay, now Euro CHF, we are still very, very bearish. Okay, let's delete these. Okay, let's leave it. Maybe a good thumbnail. Let me leave this. Now, remember, we're still very bearish, so I'm still also very bearish on this. Euro CHF, we have supply zones here. Nice imbalance to be filled. And then this zone, we also have this liquidity grab zone. Yeah, so those are the two zones I'm expecting Euro CHF to sell off from. Okay, we have a zone here. That's and a zone here. Okay, so my target is always 30 pips and I'm always done for the day. But you know, it's always good to aim for smaller pips than to aim for the 100 pips and 200 pips. You understand? When you aim for something reasonable and something realistic, market should definitely give you. Unlike aiming for 100 pips a day, 200 pips a day. What if the market doesn't give you 200 pips a day? It means, it means you won't be happy. You would be emotionally affected. You would be forcing trades. You would be forcing trades just to meet that 300 pip target for the day. But for me, something like that happened to me on USD CHF last week. I was just expecting 30 pips and then I got almost 100 pips over here to sell. So just be realistic with yourself. Market will definitely do what it's meant to do. Let's move to the next pair, which is Euro USD. So Euro USD and Euro CHF actually look alike. Yeah, so same thing happened here. We have taken a loss on the 5 minutes time frame, just like I explained over here. I won't go over that again since we have the same structure. Okay. Now Euro USD is still kind of ranging over here. Okay, still ranging. It has not dropped. Now let's go into the weekly time frame back again. Okay, the weekly is still very, very bearish. Very bearish. Broke all the lows. Yeah. Let's move to the daily time frame for. Okay, this is the 4 hours time frame. Yeah, so same thing like the Euro CHF, this is the 4-hour time frame also. And yeah, just like I explained the previous one. And then the next one here also same entry. And so what are we expecting for the next week? You can see I don't really have a good structure here. You can see all these eyes over here. So this one has actually taken out these two eyes. And then I'm still expecting the sales. Okay, but for now we have no reasonable structure on the 1 hour time frame. Let's just move to the 15 minutes time frame. So since this is a break of structure on the 15 minutes time frame over here, you can use that as a good point of interest also for the coming week. That's so you can then look for your entries here or aggressive entry, whichever you'll be using. So that's what I've used. That's the only sell zone I have for now on Euro USD, 15 minutes time frame, 15 minutes point of interest, and then your TP should be yeah. This is the next reasonable point of interest to buy. Okay, because this point of interest has been actually mitigated. Yeah. So the buys came in. I'm expecting sales from there. Though I'm not expecting 200 pips so on the trade. You understand? When I see what I'm looking for, this is just like the targets expecting to reach. And the last pair here would be GBP JPY before we move to volatility indices. Yeah, volatility indices last week I said I didn't have any analysis on it. Now let's go back to the weekly also. Now you can see the weekly is kind of trying to move bearish now. We had this, break of structure here. Now market has mitigated what? The week. Okay. Now it is trying to sell. Once it breaks out of this point of interest here, once it breaks out of it, then it will be officially what's bearish. So you can consider these demand zones also valid, but we haven't gotten there yet. You understand? So let's still follow the sales for now. Let's move to the daily time frame. Entering the daily time frame too is also looking very, very bearish. Nice bearish moves. 4-hour time frame. Okay, nothing so fresh on the 4-hour time frame. Good break of structure, like standard break of structure, and I'm expecting more sales. So looking at this point of interest here, we had sell point of interest over here. We also had a buy point of interest that entered the sell point of interest. So definitely here you can also find your entries. Now the sell has actually started. Remember, we have some demand zones here. Yeah, so these demand zones can react like this demand zone, pushing us into the sell POIs. So we can, get a POI, probably this or this. These buys might lead to them, and then the drop will just continue like that. Okay, so where are my sell point of interest? I have this one here. Why? Clearly, we have this low taking out nicely, and yeah, I think that is what I'm expecting. If I say I should draw out this point of interest here, is a minor point of interest because market is almost getting there, and then probably during Asian session, market will just use it as a range, and this will be the major point of interest. So that is why. So it's a good point of interest, but not so major like that. And then if market reacts to this zone, probably comes here and then take off. But nonetheless, anything can happen. You just have to react according to what you are seeing. So right now, market has not created what I needed to see, what I need to see rather, and probably it can sell from here, and then the sell will just start like that. But let's still see what's going to happen. Either this supply zone or this supply zone. I'm going for both. But this one, I won't be looking at this one so much because I'm expecting that Asia session will just, go up above it and enter this, or might not even enter this, just feel the imbalance, create its own point of interest, and then sell off. I think that's not bad also. Now, moving to the volatility indices, we have volatility 75, 1S index. Let's just use the 4-hour time frame and the 1 hour, check what we are looking for. Be waiting for it to bring up some data. Okay, looks like this one is taking ages to bring up some. Okay, now we have the 1 hour time. I don't like the structure on the 1 hour. We have a lot of frame zones. Yeah, so this is still more realistic. And for sales, zone, and probably other extreme zone. So then you can take counter trend buys. That's so I'll just use this extreme zone. Now let's move to volatility times 5 index. Yeah, I'd like to see the 4-hour time. Okay, here is what I have in 4 hours. Looks bearish, but trying to come up. See, it has not broken out its high. Still reacting to it somewhere here. But once it breaks out that high, then we'll start looking for buys. But for now, you can just take counter trend buys. Those are the major movement. Let me just move to the 1 hour time frame and see what we have. Okay, ranging over here, and okay, so I'll just go for the sell zones over here. Nice, like sell from supply zone here, and these are the two things I'm expecting on volatility on 5. A sell here, and then probably a counter trend buy to give us another sell movement. So these are my expectations for the week, and then we'll meet again next. That will be all for now. Peace, guys. I'm out.